All right, hi everybody. Let's talk a few minutes on calendar trades. And this is for beginners. What is a calendar? A calendar is a mixed month spread uh, with same strikes. So in this example, today is September 28th. We're buying the OCC 14 and we're selling the OCC 11. There's 3 days between the long and the short, and that's going to be the cheapest calendar. It'd be $2.50. Our risk is $250, and that's pretty cheap for a $5,000 vehicle. Here's the graph, uh, and as of today, this is a Saturday, but the short, the OCC 11 5740, has 11 days till expiration. Check that, OCC 11. Excuse me, he has 13 days to expiration. Our short and our long has 16 days till expiration. So it's a 13-day trade. This is your expiration graph, what it looks like in 16 days. This is what it looks like today. And over time, it morphs into the expiration graph. And what's nice, pretty wide here. So you have the profit area, it's around 57.40, 57.38, but close to 57.40. That's where our strike is. And you can see these expiration break-evens where the break-even graph crosses zeros around 56.50 on the downside and 58.50 on the upside. So you've got about 90 to 100 points either way. And that's pretty good on a trade that expires in, less than a couple weeks. And on this particular trade, if you look at, it's 13 days from expiration, I expect to be in about 30% of the time. So if it's 13 days, 4 days or so. My favorite calendar is a 15-day calendar that you'd put on Thursday. Put on Thursday, 15 days out would be 2 weeks from the next day, Friday. But when you look at the calendar here, you can see here, how do you make money? Your short term, even though there's more extrinsic value in your long, your short, because it only has 13 days to expiration, is decaying at a rate of $2.60 a day, and your long is decaying at 224, and that will pick up as you get close to expiration. So you could see if they make a price of, almost $61 for your short, and your long is around $63, and it's saying your longs are going to decay by more, or your shorts are going to decay by more than your longs. And that's why when you look at a graph of this, at expiration, it says you do real well. Well, that's because at expiration at the short strike of 57.40, your OCC 14s will go to zero, and your OCC 11s will still have 3 days left. And whether that's, $18 or $20 in 3 days for your long, that $2.50 can soar, right? This is saying you can make over $2,000. But again, generally the plan we'll have is, maybe to be in a 13 or 15 day trade, 4 or 5 days at the most. So because you can see here's 4 or 5 days, as you go 4 or 5 days forward, you can see there's pretty good money in here. The purple graph will start going up. So the goal here on these calendars, and I'd encourage you as beginners, put one on each week. Put a 3 wide on. You can put it on Thursdays. And if you put it on Thursday, you don't want to be in it more than Tuesday or Wednesday of the next week. I'd be out of it by Wednesday. And a simple plan for a beginner could be, because you got all this room, take the expiration break evens here. And if we go maybe 10 points past your expiration break evens where the blue line crosses zero, just get out, right? And you could always, over the next day or two, just reposition it at the money. And I think you'll have a trade that has a high probability of winning, because the probabilities of staying break evens plus 10 points, break evens minus 10 points on the downside are pretty good, right? You say, why? Because if I'm only expecting to be in this at the most maybe 5 days, a 5-day expected move or standard deviation at 80 points. So they're saying if we're at 57.40 here, there's a 68% probability we'll be up or down within that range, up or down 80 points over the next 5 days. And that would take us to, 58.20 on the upside and 57.40 minus 80, 56.60 on the downside. And that's all in the profitable area. So we're creating a trade that has a high probability of winning by staying in at about 30% of the duration. And if it goes 10 points outside the break even, just take it off. And so you're creating a trade, you're either going to make a profit of, you'd be looking for, 10 to 15%. And at the most, probably you lose 0 to 5%, but you should have a high probability of winning. Now, again, it's only $250, so 10% of that's not going to get you that excited, but this would be good to kind of, what do they say, chip your teeth on or cut your teeth on. So, all right, folks, this is hopefully a good start for you. Put on a calendar every weekend Thursday. Here's some guidelines. Thank you.